The Wallace Business Forum is a 30-year-old think tank that provides a valuable link between the country's top business leaders and the leaders of government. It helps CEOs to understand the environment with which they must operate through a series of publications and meetings that access the business, political and economic environment and predict where we may go. WBF is considered one of the most authoritative, independent sources of information and assistance in understanding in the Philippines. We tell it like it is.
Disruptive world, we see this as an exciting time for bold and forward-thinking leaders.
With several leaders of economies today reminded APEC leaders to focus on economic synergy and cooperation on this year's APEC.
Welcome to Boracay, the Philippines' most famous beach.
We have covered the journey of our young democracy. In ANC, we were witnesses to the defining moments of Philippine history that influenced the world.
To the service of elections.
We chronicle the journey of a dynamic young population as it makes its mark in a robust economy.
We talk to leaders. We don't shy away from difficult conversations.
ANC Leadership Series.
We don't just tell stories. We tell you why they matter. We sift through the noise and arm you with facts.
PCB is history. we report about disruption and how the latest technology and innovation have changed the way we live.
We told stories about crisis, but also about opportunities that came with them. This is the Philippines.
The success story we want to share with the world, and we are ANC.
Thank you, Joey. Thank you, Dom. Your presentations were indeed very informative. I'm sure our viewers have a lot to take away from them, especially your recommendations on how they can seize opportunities amid the current challenges. Let's now move on to the more interactive part of our webinar, which is our open forum. I'm sure you have a lot of questions to our speakers. I would like to invite Dom back on screen again. Hi,
Hello.
Dom. But before we start our open forum, let me first introduce our panelists. First is Colliers Managing Director, Mr. Richard Raymundo, and our Director for Advisory, Tem Teodoro. Hi, Rich and Tim. Good morning. Our third panelist is Paul Chua, Colliers' new Director for Capital Markets and Investment Services. Paul, who rejoined Colliers just recently, has over 20 years of experience in real estate development solutions, strategic acquisitions, deal structuring, financial modeling, and venture capital. He is well regarded for his insights and expertise in the real estate industry, and his clients include major real estate developers, multinational companies, and large local organizations. Hi, Paul. Welcome back again.
Hello. Good morning.
Hello. All right, let's start our panel discussion. We will be sending you questions from our viewers in our chat line. So if you see any questions you would like to address that I haven't asked, feel free to let me know. Let me begin with the office sector. Dom, the landscape for office leasing continues to be challenging, but there's been some promising developments, one of which is the CREATE law. What do you think will be its biggest impact on the industry?
Yeah, it still is very challenging, and we're glad that the CREATE law was recently passed, including the IRR, the implementing rules and regulations, clarifying the finer details of the law. So that means the uncertainty of what tax regime we will be in is already gone. It also provides for a 10-year sunset provision. So PESA registered companies are assured of a stable tax structure in the next 10 years. The other thing is the immediate reduction of the corporate income tax from 30 to 25% and 20%, depending on the scale of the companies. And these are for domestic companies. So we are looking forward to the rebound and the rebound of the micro, small, and medium enterprises. And eventually that's going to drive office demand. I think the immediate impact of this is on the retail sector as well, because the small businesses will be able to have more money in their hands. What else? Of course, the standardization of the the tax incentives across the different investment promotion agencies. So there's no more advantage for, say, PESA. It's uniform across the investment promotion agencies. So there are more options for investments right now. They're not constricted or constrained to be within, say, PESA zones only. They can choose other economic zones across the country, and if they don't want to be limited by location, they may just opt to register with the Board of Investments.
Yeah, Dom, in addition to this, a question from Bria Jarlego. What are the effects of the recent BIR RR9 2021, the 12% VAT release, if not deferred in the office sector, PESA, non-PESA buildings?
Yeah, that cost us care for 1 week for PESA, especially for PESA occupiers. But after the PESA occupiers provided their stand about it, the BIR already suspended the implementation of that since July 2021. And by simply reading the CREATE law, the intention is not to scrap the 12% exemptions of PESA occupiers. So I'm just glad that that's already out of the issues of PESA occupiers.
Thank you, Dom. Another question. What does the office tenant profile look like? Previously, we had the BPO boom, the POGO boom, and now we're occupying office space in the CBDs.
Yeah, so again, in line with CREATE, the reduction of the corporate income tax, we are already seeing more, there are already new companies coming in because of the more favorable corporate income tax. So that means we might see an increase in terms of the transactions coming from traditional occupiers, while the BPOs will continue to be huge occupiers moving forward, especially with the rebound of the first world countries. So we're just waiting for us to have substantial inoculation so that we can already see BPOs coming back to the office and eventually expanding.
Another question from Miss Betty Ang on, I think this is vacancy. What do you mean by 12.5% breach in our projections for vacancy for the office?
Yeah, so in the first quarter, since we didn't expect more surges in the COVID cases, the year-end 2021 forecast was at 12.5%. But we've seen how the surge in cases affected the second quarter results. That's why we saw the vacancy increasing already to 12.7%, which already exceeded the 12.5% full year forecast. That's why we revised the year-end vacancy forecast to around 15.6%.
A backup question from Victor Manarang. What's your forecast for office rental rates next year, succeeding years? For an investment decision, 6 months outlook is too short. So this bill question is similar to the one I asked third quarter last year, is reduction in rental rates that we are expecting.
Yeah, it's really hard to predict, no? But I think what I can say in general terms is that more flexible commercial structures help occupiers overcome the high risk of doing business right now. So I think market forces will work towards that direction, further reduction in rents moving forward, while substantial available spaces are available in the market.
Thanks, Dom. Let me move on to Paul. It's interesting to see good news, Paul, in the manufacturing sector. Do you think this will in any way result in greater demand for industrial space and warehouses? Which locations do you think will benefit?
Well, I think we haven't seen any decline in terms of demand, particularly for warehousing. The locations that Joey mentioned earlier are still the top locations for those. So Cavite, Laguna, Batangas. But we are seeing areas such as Bulacan, Pampanga, Tarlac are starting to gather new interests from locators. So, I mean, we haven't really stopped offering these types of locations to our clients. So, I mean, I think it will still continue to grow in the next couple of years.
Another question on industrial from Nathan Galvez. Do you see any trends on warehouses or forecast for 2021, 2022? Also Manila South from Ben Jose. Locations that you would recommend for Manila South?
Manila South. Well, anything. I think the question is what is Manila South, right? So anything that traverses the South Luzon Expressway, I think, is considered part of Manila South. So Calaba area is still, that what we feel are the top locations for warehouses. Forecast. I think supply is a little bit low at the moment, so we expect prices to inch up a little bit in the next couple of months. So we might be able to see people looking at the north at this time, so that the price disparity would, they would still be able to get a much lower rate compared to those in the Calaba area. But I mean, those locations are still top notch for me for warehouses.
Okay, Paul from Betty Ang, how much are lease rates for warehousing lots in Bulacan? Your recommended locators for Bulacan?
Yeah, it depends on the location. So anything along the planned infrastructure projects would definitely gather more interests for locators. So in terms of what type of locators, mostly in the north, I'm seeing a lot of pharmaceutical companies trying to locate there. But warehouses are always, in demand, particularly with the surge in e-commerce in the Philippines. So we would see a lot of inquiries coming from these types of clients. In terms of rate for land, I think Joey mentioned it earlier. So if it's pure land with no warehouse, less than 100 pesos, I think. But, if it's with the standard SFB, it rises up to about a maximum of about 300 maybe in the north. Obviously, the south will gather more rates, because of its location.
And do you see government incentives for warehousing?
Other than the typical BOI incentives, no, I think maybe it's something that they should look at.
Okay, Paul from Daniel de Guzman, what is the short-term direction of industrial parks expanding outside Calaba or other growth centers?
We've seen a lot, particularly in Pampanga. In Bulacan, there's a couple new planned developments. So the next couple of years would be very interesting because we're seeing big developers going into these locations. New Clark City is one. So it's a very huge industrial land back there. And I think that's the trend nowadays because land in the south is becoming scarce. So, and the traffic to the north is, in my opinion, better. So I think the north, that will be the next wave.
Thanks, Paul. I think for Joey and Paul from Romeo Pascual, lots of news about data centers opening up. What's your take on this? Which particular locations will benefit? Paul, you can start, then Joey can answer next.
Yeah, we actually had a few inquiries regarding data centers. Location-wise, as long as it has a very good connection to internet, or there are particular locations that they are very specific on because they would need specific types of providers in those locations. Other than that source of power, because data centers are very heavily reliant on power, so stable power would be very important, as well as cooling systems. So because obviously they produce a lot of heat, they consume a lot of power, and those three things are what I think would be very critical for data centers.
Thank you, Paul. Joey, any more insights you want to add?
I think for data centers, there's really a lot of technical considerations, right? Internet connectivity is one. In terms of location, I think based on recent news that we've been seeing, so there are some players in Cebu. We get queries within Metro Manila. I think we recently recorded a transaction Ortigas Fringe area, right? So, but I think aside from these locations, other players are looking at the key urban areas. So we're also looking at cities that have a greater concentration, maybe in terms of outsourcing activities. So I believe Clark is also being considered as a prime location, a viable location for these data centers. So let's see. What's important really is the technical specifications, and this really have to be met first before we really close these deals with the data center locators.
Thank you, Paul. Joey, next question is for Tim. Do you see more joint venture projects moving forward? And can you identify factors contributing to the popularity of these projects?
Well, the argument for a joint venture is very good. And developers will likely pursue this mode of securing properties, especially given the current conditions, because in a typical scenario, you have the developers having to pay for the land and also fund the development. Whereas in a joint venture arrangement, developers may be able to secure the land with minimal cash outlay or even no cash outlay, and then they can concentrate all of their funding into the development and also the marketing of the project. So given conditions, their exposure is less while they'll be able to achieve the same results. And as for the landowner, they get to realize the value of their property as well as share in the potential upside of the development. When they get a good partner with a good brand, with the technical and also the marketing expertise and organization.
Tim, another question for you from Dennis Makalisang. Are there any REIT acquisition of properties outside the developer's REIT portfolio? Most REIT at this time are existing leasing assets of each developer.
Yes, I think for now, most of the activities really of REIT are concentrated on the developers' portfolios, and that I think is more typical than we have the Ali REIT and the Double Dragon REIT and eventually the FLI one. For now, it's like that, but eventually we see that market growing and expanding in terms of acquisitions.
From Joseph Castellano Tim, he was asking, are there any trends towards residential developments with green certification for buyers or for developers this 2021?
I think a lot of developers are trying to differentiate themselves by offering these kinds of green certifications. And it really, especially with the COVID pandemic right now and also concerns about climate change, I think this is on point with the trends in terms of sentiment of buyers, especially, with when you're targeting millennials also, those kinds of values are also important to them and sometimes informs their buying decisions. So it's a great way of differentiating themselves, and the buyers appreciate that kind of development that helps improve their experiences and their lives within those communities.
Thanks, Tim. For Richard, Betty from Betty Ang, which REIT do you recommend for investment long term?
Well, all REITs, I think, are defensive plays. So you're going to have stable income. So look at, this is how I'll put it. Look at the REIT companies. Look at their roster of tenants. Look at their strategy also. Tim has mentioned that the strategy right now is accretion, basically getting new properties from the parent company. Eventually, the strategy will be buying from a third party or using leverage to buy other properties, or even value add, or buying properties which are being underperforming and fixing it and increasing the rent. So look for strategy, look at their roster of tenants, and look at how they manage the portfolio. So that's how I look at the REIT that I'll invest in.
Yeah, Richard, the government just announced another ECQ that will start August 6. People are asking our forecast, its impact for the real estate sector.
Well, I guess the biggest impact would be on retail. That has always been the one that quickly sees the impact on lockdowns. You know, before when we went into the GCQ, some retail tenants were already getting 50 to 60% of their pre-pandemic sales. They were already getting better. They were seeing uptick, and you saw restaurants. Restaurants were already getting and getting used to it. You know, al fresco dining. You know, they were getting on platforms for delivery. You know, they learned how to cope with it. I know that it was mentioned that from August 6 to 20 with the ECQ, no dine-in will be allowed. No al fresco will be allowed. So it's only deliveries and takeout. So that in itself, that would be one big factor in retail. So retail would probably be the biggest impact. But if you look at office, we've pivoted to work from home. We've gotten used to lockdowns and getting back to the office. I think it would be the retail which might have to see some impact on this.
Yeah, Rich, another one from Romeo Pascual. What's your view on the upcoming 2022 election? Any concerns for occupiers, investors of possible pivot of policies or regulations?
Well, we've always had some times wherein, you know, we were feeling our way on who's going to run. So let's see. It's still a bit too early. People are still fielding their candidates on who's going to run. As you know, that has an impact on geography. The Duterte, for instance, administration, we saw an uptick in investment for sales, particularly for residential. So that has that impact. And then for regulations, POGOs, you know, that had an impact on office when that was open. So let's see as we get closer on who's going to run and see what impact that will have.
Thanks, Rich. It's 11:53. For all of the questions we haven't answered, we shall reach out to you. And thank you again to our speakers and panelists, Joy Roy Bondoc, Dom Fredrick Andaya, Paul Chua, Tim Teodoro, and Richard Raymundo for lending us your time and insights on the current landscape of the real estate sector and providing us with recommendations as we gradually and safely move towards the second half of the year. We would like to once again thank our event partners, the British Chamber of Commerce Philippines, the Australian New Zealand Chamber of Commerce Philippines, ULI Philippines, the Wallace Business Forum, the Department for Human Settlements and Urban Development, the ABS-CBN News Channel, the Philippine Daily Inquirer, through Inquirer Property. To officially close our program, let's hear our final remarks from our Managing Director, Mr. Richard Raymundo.
Thank you for joining our quarterly update. I trust that you were able to get insights that will help you navigate through our current operating environment. Again, it's more challenging now that the new quarantine or ECQ has been announced a couple of minutes ago. It is clear that the vaccination is our only way out of this pandemic, and this will enable the real estate industry to recover. With stable supply that's coming into the country and a high jab rate that has even breached the 600,000 per day, we are hopeful that we can turn a corner for the property industry. I know that there are more questions and we would be delighted to further discuss with you. Please reach out to us so we can help further accelerate your success. Again, stay safe, stay healthy, and please get vaccinated. Bye. Thank you.
Thank you, Richard, and thank you to everyone who joined our webinar today. You're welcome to reach out to our team if you have further questions, if you'd like more information about the reports presented. If you'd like to stay updated on the latest Colliers insights on the Philippine real estate sector, please follow us on LinkedIn, Twitter, Facebook, Instagram. You may also download our reports and read our latest articles on our website, colliers.com. And if you would like to hear more from Joey, he has a weekly column in the Philippine Daily Inquirer called Colliers Review. It comes out every Saturday in the newspaper's property section, so make sure grab a copy of Inquirer or visit inquirer.net. Also, join us in our upcoming webinars. You may scan the QR codes on your screen to register to these events. On August 12, we will hold our Davao Property Market Briefing, which will feature Joey Roy Bondoc alongside Carrie Lagdameo, President of the Mosalan. In this webinar, we will discuss the real estate market of Mindanao's most important business hub and its outlook beyond 2021. Then on August 18, we will hold a webinar on hybrid work model and how it's changing our workplaces. This webinar is in partnership with CWC Interiors, Herman Miller, and Converge ICT Solutions. And if you register in this event, you will get the chance to win a Herman Miller chair courtesy of CWC Interiors. So please make sure to register. Once again, on behalf of Colliers, thank you for being with us today. Stay safe, stay healthy, and we look forward to see you again in our next briefing. Goodbye, everyone, and we wish you all a fantastic second half of the year as things gradually continue to get better.